Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib, and MBS Highway is created exclusively for an MPTV, and it's brought to you by friends at PRMG who are working for your best interest. You know, we saw interest rates bump up a little bit, but you wouldn't think so since the big jobs number was disappointing. The BLS jobs number was expecting 500,000 jobs, only got 245. Even the number we got earlier in the week from ADP showed a disappointment in job creations. You know, we lost 20 million jobs. We got 10 million that came back, so we're still short 10 million jobs. Boy, adding 240,000 or 250,000 jobs a month, that's just not going to cut it. It's going to take way too long for that to happen. So why didn't the bond market respond well to this? There's a couple of reasons. One was the fact that this number is so bad that now a stimulus deal looks like it may be in place. And A, that's good for the stock market, so stocks rallied. B, that could be inflationary. And speaking of inflation, we are starting to see some signs of it because of everything I've been talking to you about. Demand is high, supply because you don't have these workers, and you don't have businesses out there that are surviving. You had some zombie businesses that unfortunately had to close because PPP money's running out. All of these factors now causing some supply chain disruption. When you have more demand than supply, you get inflation. That's the arch enemy of bonds. Now, when we take a deeper look at the jobs numbers, we find a few important things. Number one, hourly earnings, they were up, but not as much as what's more important, and that's the weekly earnings. The media doesn't talk about that. Now, weekly earnings were up 5.9%, almost 6%. It was 5.7%. That's pretty strong. And that's keeping up with certainly appreciation. That's something that the media does not understand as well. So appreciation levels are about 7% per year, not the median home price, which is up 15.5%. This is actual appreciation. So earnings up 5.9%, you might think they're a little bit below that. But remember, you don't use all of your weekly earnings for your mortgage payment. You use a fraction of that. So really, if you're having 5.9% gain in weekly earnings, you could see 15, 20% appreciation. And if rates stayed around the same levels, it'd actually be more affordable. Now, yields are moving up a little bit, and they're nearing levels that are at a level of resistance. So we could see them kind of ease off a little bit. But one of the factors on that inflation theme is the numbers that we're going to get this coming week on inflation and the consumer price index. So that will have a bearing. I expect that number to be tame. I think the bond market will respond pretty well, but there are some hints of inflation that are out there, and that's what's causing the bond market some trouble. In addition to that, the stimulus deal, we have to be on guard for that, because certainly while that will help many businesses, because now remember, the unemployment benefits, they're expiring. The pandemic unemployment assistance and emergency programs, they're expiring. So people are rolling off those, and businesses do need this help to survive. So if we do get another stimulus deal, that's something that the stock market will likely benefit from, but it could come at the expense of the bond market. We've seen that before. So we need to be on guard for that if there is an announcement. So it's going to be some rough sledding here, some choppy waters, but we'll help you navigate through it. It's why you should be a member of MBS Highway. Hope you guys have a great week ahead. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.